This content is brought to you by Link2, which makes private equity investment very easy. Link2 is democratizing the process of being able to invest into tech companies and crypto companies. Previously, this opportunity was only available to venture capitalists, hedge funds, and investment firms. Well, now, if you are an accredited investor, you can get this opportunity before you to be able to invest into crypto companies like Ripple, BitPay, Dapper Labs, Uphold, Abra, and many more. Link2 continues to add these respective companies and their portfolio is growing. So this is a great opportunity to double dip, to be able to hold the crypto tokens such as Ethereum, Algorand, XRP, or whatever it may be, and also invest into the companies that are building the infrastructure of the crypto market. And Link2 was part of the group that invested into Coinbase pre-IPO. And of course, that did really well for them. Well, you have the opportunity to catch the next Coinbase with Link2. So definitely check them out. It's once again the opportunity to double dip, just like the VCs, just like the hedge funds. Check out Link2, link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Jack McDonald, who's the CEO of PolySign and Standard Custody. Jack, it's great to have you back on the show.
Thanks for having me back. Always a pleasure, Tony.
Jack, I would love to start with the recent news, which is the Series C funding round of $53 million via PolySign. Can you tell us about that, who participated and how the capital will be leveraged?
Sure. Super excited to have this round behind us and to bring on board some really terrific new investors and also participation from some of the current. So the round was led by a collection of Soros, Brevin Howard, and the market making firm GSR, all new to the cap table, all really valuable strategics, we think, who are going to be terrific partners to us, provide a lot of input, and be able to leverage the platform that we're building. Also, repeat participation from Cowen, Ripple, and others. And so we're very deliberate about the investors that we bring on board and couldn't be happier with the folks that we have there. The primary purpose was to finance the acquisition of MG Stover, which we closed about 8 weeks ago. I'm sure we'll talk more about it, but just absolutely thrilled with being able to partner with Matt Stover and the leadership team that he's assembled there over the last 10 plus years, even more since they started the business. They're really the OG in fund administration around digital, and a lot of synergies between what they've been doing and what we've been building at PolySign and Standard Custody.
Tell us a bit about that and how you're going to leverage the capabilities of MG Stover and integrate that into whether it be PolySign or Standard Custody.
Yeah, so, and just maybe to reorient you. So PolySign, think of it as the parent company is where our software gets built. We have a wholly owned subsidiary in New York called Standard Custody and Trust, which has our New York trust company license to provide custody and escrow services for institutions. And now we have another wholly owned subsidiary called MG Stover. We're thinking through kind of some different branding opportunities there. The strategic imperative in putting those businesses together really stems from when we started PolySign 4 years ago. Arthur Brito, who founded Ripple, as you know, our founding father, Tim Keeney, our vice chairman, who ran all asset servicing globally at BNY Mellon, and others came together with a view towards how institutions will embrace digital assets and the sort of infrastructure they're going to need to do so in a secure and regulatory compliant way. We wanted to start with custody first and foremost, as that really becomes a foundational pillar of support that investors need, but then also had a longer term view, medium to longer term view around other services that complement custody. And if you look at the precedent which exists in TradFi today around the global custodial banks, so think of State Street, think of Northern Trust, BNY Mellon, et cetera, they all start with custody and then they build these other services. Fund administration, which is very strategically aligned. The business I used to run at Conifer had a custody business and a fund admin business. And so I know the synergies there. So our view, and this was really opportunistic in terms of how we could bring the businesses together, was to take the custody business that Matt Stover had built and think about revenue synergies. This is not a cost-cutting effort where we are basically putting two different fund admins together, squeeze out costs, improve margins. We didn't have a fund administration business here. So it's really about leveraging the client base. Clearly, there's a cross-selling opportunity from a revenue standpoint. We want to cross-sell our custody business into the fund admin clientele and vice versa. But really importantly, think about the data that each one of those different client segments consume and bring them together. This team at Stover has been working on a client dashboard reconciliation and performance reporting tool called DART, Digital Asset Reconciliation Tool. And you can think about it of a bunch of really skilled and experienced accountants building tech. What we have is a bunch of engineers building tech. We've got over 70 engineers here. And so we've taken, in a few short months since we've been together under one roof, we're bringing all the different reporting and technology initiatives that the Stover team has developed and bringing them under the leadership of Dale Quantz, our CTO, our product team, et cetera. And so we're able to accelerate the build. And we've been putting those products in front of our respective clients, getting feedback, and ultimately want to have one dashboard we think is going to be really powerful for whether you're a custody, a fund admin, or both, the type of data you consume, how we're going to increasingly build efficiencies in terms of data input from our clients and the output to our clients, helping them better manage their portfolios, help our clients, i.e. the end investors, consume that data. The whole DeFi arena brings up new needs from a manager standpoint, and also how we service them internally. And so it's a lot about revenue generation. It's also a lot about data integration and how we're going to render the data in a more efficient and helpful and constructive way for our clients.
Yeah, that absolutely makes sense. It sounds like it dovetails well with standard custody and the work you guys are already doing. With that said, we had the bull market last year. Now we're in a bear market. I'm curious, has there been any downturn in institutional demand, or are they looking past the market cycles? And, is there still interest with the different prospects that you guys may have been talking to?
Yeah, we have the opportunity to talk to clients every single day. And I would say the majority of our clients are viewing this as an opportunity to build new products, to establish themselves as leaders. We're fortunate, and particularly in the MG Stover business, it's been around a long time, and standard custody more recently, we have a marquee list of clients. And so they are the established leaders in the space. And I think overall, what you're going to see on both the buy and the sell side is, and you are seeing already, is a real flight to quality. And so those managers are holding themselves out, saying, we've been through the cycles before, we've been successful, and we see new opportunities in the marketplace. I think clearly fundraising is going to take a little bit longer, whether you're a new launch or an established manager launching new products. But net, we're seeing absolutely more clients launching new products than we are seeing clients closing any vehicles or products. I just think the duration is going to be a little bit longer. In terms of new entrants into the space, particularly on the institutional investor side, there's a range of mentalities that have come into it. There's the crypto curious who are getting ready to dip their toes into the space. This market pullback, in some cases, is a buying opportunity, and they're really excited to come in. For others, there's been, a sense of maybe we should really pull back here. And upon reflection, maybe there was a little bit of FOMO driving some of the interest of getting into the space, coupled with, in some cases, the house is currently on fire. With my core business in the traditional markets, obviously there's been a strong correlation, across the board with nowhere to hide. And so I think some managers have said, this entry into digital and crypto was a new market, a new asset class for us. Not only are we not going to do that, but we're going to focus on making sure that our core business is healthy before we branch out into new areas. And so we are definitely seeing some people, I think, delay some of their investments into the space, but more so, we're seeing folks viewing this as an opportunity, being a little more muted, I think, in terms of the levels that they're coming in, and certainly being more selective in terms of the assets that they're purchasing, the protocols that they're investing in, the service providers they're using. So I think that's been a healthy kind of retrenchment, if you will, in the entree into the space.
Yeah, that totally makes sense. Tell us a bit about the type of institutions that you've been seeing. And I know you probably can't give names, but are they banks, funds, VCs, endowments, things like that?
A broad range. So I'd say yes to every. Certainly on the fund administration side, we see continued interest in the VC community launching new products into the space. Also, we are seeing more and more interest from some of the asset allocators, pensions, endowments who need help with this particular asset class. And while, broadly speaking, there's only one fund administrator for a given product. So if you're an endowment, University of X or corporate pension plan, one doesn't have multiple fund administrators. By definition, there's one official books and records. As opposed to on the custody side, you can have multiple custodians, multiple prime brokers that could potentially even be a sub-custodian for an asset class. You don't have the same correlation in fund administration. So from a fund admin standpoint, we are seeing some of the larger institutions who have reached out with an interest in helping them do accounting and reporting for a sleeve that would ultimately potentially feed up to their core fund administrator. And that's in addition to new launches, and new vehicles or products that our current clients are launching. On the custody side, we're seeing a broad range from in some cases, RIAs, in some cases, asset management platforms who are really interested in building out product capabilities. We're seeing banks, the big banks, we'll talk about them in a moment. Hedge funds, obviously, whether you're native crypto, there's always a need for new technologies, new solutions in the custody side. And finally, the new entrants into the space who are traditional hedge funds who are coming in and thinking about this as an asset class. So they've been using the Morgan Stanley, Goldman Sachs's of the world for prime brokerage. But when you come into crypto or digital, there's not a solution that the traditional investment banks or large custodial banks can provide. I think there's a lot of press that we read about the big name global banks and investment banks coming into the space. And the reality is they don't have the regulatory approval to do it. So whether you are a GSIFI, big global systemically important financial institution, the State Streets, the Northerns, the BNY Mellons, et cetera, or whether you're the investment banks with the broker dealer, FINRA has not given you approval to custody and trade crypto, or if you're a GSIF, you need Fed approval to do that. So I think a lot of those banks are researching the area. I think a number of them, and there's been press around this, have licensed some software, and they seem to be building capabilities to be ready when either they get the regulatory approval to enter the space and or they see enough demand from their client base. So there's a near-term opportunity for companies like ours, I think, to build a presence in the space and to gain share before the larger banks come in.
Yeah, it's so fascinating how you have companies such as yours and startups and smaller folks, and even retail gets a front run a bit of these major banks. It's just an interesting dichotomy than what has been historically.
That's right.
Yeah. As far as your 2022 roadmap, and I know we're past half the year, is there anything else on the roadmap for you that you can highlight? I know some things may be on the wraps for now, but what you guys are planning to work on or maybe release and things like that.
Yeah, I think about it in terms of vertically and horizontally. So from a vertical standpoint, we're always looking to add more tokens to the fund custody business. And so that's an ongoing process. We think about services that we'll continue to add, and part of that can be internal. So we're constantly in a state of developing and enhancing our client portals, the reporting we give, et cetera. We place a very high priority on client service. So we're adding a lot of resources in that regard. And we also think about broadening or expanding the type of services that may or may not fit neatly within the four walls of standard custody, but that we can do through partnerships. So we very much value the importance of focus and doing so in a conflict-free way. So at standard custody, we provide custody and escrow services to institutions. We're not a custodian. I mean, we're not an exchange. Rather, we don't do trading. We don't do lending. We don't do borrow, et cetera. That said, clients want all those different services. And so our approach there is through a best of breed approach. We do a lot of partnership work with Cowen, a big investor of ours on our board. We've got trading relationships with FalconX as well from a staking standpoint, building out relationships with Figment, Blockdaemon, and others. And so we like working with those sort of organizations on the lend borrow side, Cowen Digital, building out, a business there. And so while we have partners that we like to work with that we go to market together with, we also subscribe to an open architecture. So if a client wants to custody with us and trade anywhere they want to, we support that. We don't have a punitive approach of taxing clients who want to leave the nest, if you will. And so we'll continue to look for best of breed partners who can offer value to the services that we provide to the benefit of our clients. On the fund administration side of the business, and I touched on this earlier, I think a lot of the enhancements that we're going to bring there have to do with data reporting behind the scenes, trying to automate more and more of the work we do. So much of fund administration, middle and back office work around digital assets is manual just by nature, particularly when you introduce all the DeFi capabilities that managers are bringing and needing support for. And so we're trying to be really thoughtful about where we can blend technology with the human processes to make that more efficient for everyone. I'd say the third line of our business, which doesn't get much attention or press, which is very important to us, is something we're calling PolyNet now, which has to do with building a settlement layer for a broad range of asset transfers that really spans the globe between analog and digital. And if you can envision a world where one would want to trade fiat for a fractional interest in a VC fund, or a tokenized interest in a private company, or a digital interest in a security of some sort, or fractional interest in a real asset like a building. All those different trades are happening today in respective islands or silo marketplaces. And we want to stitch those together and build a settlement layer that will allow for instant atomic settlement. We don't want to store assets on our blockchain that we're building, but rather provide a mechanism to memorialize different aspects of a transaction and replace trust with truth in bilateral transactions, and to facilitate that in a way that benefits both the buy and the sell side. And we've got some very interesting proof of concepts going on in that space with some leading asset managers and other service providers. And I think you'll hear more from us in that department towards the end of the year.
Well, I'm definitely excited to hear about that. It's just, I've been thinking about it and talking a lot about it recently with the token economy and fractionalization, and just like you said, the analog, right? The traditional assets being put on the blockchain. I'm very excited to see that. There's a question, regarding the blockchains you support and related to architecture from the community. Would you guys be using the XRP Ledger in any way, or any other blockchains? And I think you mentioned you're building your own blockchain. Is that correct?
Yeah, we have a bias towards building here. Our founder, Arthur Brito, who is responsible for designing and developing the XRP Ledger, has an enormous amount of experience, obviously, with cryptography and blockchain technology. We also are privileged to have David Schwartz, Ripple's CTO and chief cryptographer, on our board and an advisor. They've designed a blockchain that we use native to standard custody that allows us to do a number of different things around security and regulatory compliance that's truly unique. We're the only custodian in the industry that has a blockchain at our core. That's a proprietary chain, private chain. We don't store assets on it. It's really a utility tool for us to provide the solution that we built within standard custody. This other chain that I mentioned for PolyNet is also a proprietary chain that we've built. And part of the value of that chain, however, is to be completely agnostic, to integrate with other chains. And we're certainly integrating with lots of chains within standard custody. We're going to integrate with a lot of chains in the Polynet world, the underlying chain there, the ABC or authoritative blockchain, as we're calling it. And within the fund administration business, we're also starting to build more of the capabilities on chain. There are segments of fund administration that will benefit from being on chain. I say that all with an ironic twist that Arthur is probably one of the biggest cynics I know around the overuse and overhype of blockchains. And if you were on this podcast, you'd say, you know, when you're a hammer, everything's a nail. And we really are very specific about where we see real world use cases for a blockchain and where we don't. But in the cases that I've articulated, we think that there's a real value and a differentiator there. And we've got super smart people who are working hard to building that capability. And we do certainly look for ways to work with Ripple. We're always looking for ways to, to work with them.
I got a question for you. I don't know if you can answer this one because once again, it's proprietary. Your blockchain is.
You can try me. I'll tell you if I can or can't.
I would love to know what protocol these blockchains use. Being that they're private, is there any type of like proof of stake? You know, there's all kinds of protocols out there with different blockchains. Is there any native protocol to the internal blockchain or the private blockchain you're using?
Yeah, I'd rather not say in this forum to get back into it, but I think Arthur, from day one has a view towards really being best of breed and being forward thinking in terms of the types of technologies he designs, and also to be very open in terms of a desire to collaborate and really to democratize technology around the world, and to be a beneficial partner in terms of building out this whole ecosystem. He's I think very generous in terms of how he thinks about that. You look at the XRP Ledger built on open source, and this Polynet authoritative blockchain, may start private, evolve into hybrid, and ultimately will, we think, one day evolve into a public chain. And so we always have that kind of mindset in terms of how we want to work with the industry to be a builder. I think in the end of the day, what we're all doing, Tony, is trying to rewrite a new operating system for capital markets and payments globally. And so we're not of the school that we want to have everything come onto our chain. We want to kind of create this closed loop system. Quite the contrary, we want to be a participant in building a very open and flat network there.
It's interesting you use that word operating system, and I've heard Kevin O'Leary, Mr. Wonderful from Shark Tank, talk about these different blockchains as software. And I think there seems to be a shift maybe in the mindset of how we treat these blockchains. And it just clicked for me that, you said operating system and there's going to be multiple chains and we're going to have interoperability. It's just very interesting that you said that.
I think it has to be. And the more I speak to people, even outside, sometimes you can get pigeonholed a bit into just talking about, crypto custody or trading or lending, et cetera. And you start to talk to, you kind of walk out and broaden your vision a little bit. And whether it's talking about healthcare or real estate, or someone was asking me if a blockchain would be helpful in terms of national gun registration. Solid point. Great idea. Personally, I think. And you start to think about how all these different applications may ultimately live in harmony with one another and how that might work. And I do think it is a broad-based operating system as opposed to individual chains. And I think this theme around operability can only increase over time.
For sure. I'd love to segue into the crypto market and the current cycle we're in. And get your perspective. Certainly, we are in a bear market. There's a lot going on in the world. You got the Fed fighting inflation, record-breaking inflation, interest rates going up. And you have some catalysts within the crypto industry, such as Celsius bankruptcy, Terra Luna collapse, and many other items. What are your thoughts on what's happening? And do you have any type of prediction on when this bear market might end and we start seeing some upward movement?
Well, I'm calling a bottom right now, watching the ticker tape over your left shoulder there. So we're seeing some green, which is great to see. I think it's a really interesting time in the market. Yesterday's market, I thought, was particularly interesting when you had this, record level CPI data, and the equity markets are all over the place, more down than up. It kind of closed on the upward bias, and the crypto markets were up, which I thought was really interesting. I'd say a number of different things. Clearly, it's been a tough 6 months. There's really nowhere to hide. I think there's a number of reasons why we've seen a pullback in the crypto market, ranging from, I still think a lot of this industry is held by retail investors. There's been a risk on, risk off mentality. The stimulus checks have ceased coming. Gas at the pump is record high, food costs, et cetera. And so people are pulling in, saving where they can. The cynics are shouting from the rooftops saying, aha, I told you, crypto heavily correlated with inflation. So this whole thesis that crypto is a perfect hedge against inflation, digital gold, not true. I think if you want to look at the last 6 months, you'd say, okay, there's probably, certainly more correlation than some would have hoped. But I think it's premature to make any real stark conclusions there. It's been 6 months. Crypto has not lived in a recession, if we're actually heading into a recession. So let's give it a little longer runway before we actually draw too many conclusions there. And it's been the perfect storm, right? Of everything from the global macro to the more industry specific. And whether you want to think about, and let's just use Bitcoin because it's a leading indicator for the space. If Bitcoin's down, it's kind of rallied back up here, but call it 50, 60%, off its highs, and the markets are down 25%. I would argue that the first 25% decline there was heavily correlated to kind of global macro concerns, this risk on, risk off mentality. And then you have the industry specific events, which you've already articulated, which have shaken further the confidence in the industry, that have given more excuses to sell. And people are obviously either taking profits, if you're fortunate enough to have them, or licking your wounds and just kind of saying enough's enough. And everyone's kind of looking for this catalyst to go from here. And whether it's the ETH merge or other sort of events that people are looking for, or some directional bias from the broader markets, that we've kind of hit a bottom and we're starting to climb out. But it feels to me like we're closer to a bottom than not. Whether or not, Bitcoin goes to 13,000, which was the prediction I saw yesterday, because that's the new mining cost, or what, who knows? But I think it feels to me like we're getting a little closer to the bottom. I'd say two other things, Tony. One of them is, one of the lessons that I'm focusing on digesting and really thinking through is that a lot of the problems that you've mentioned have been more CeFi specific than DeFi. And I think DeFi has gotten thrown out with the baby in the bathwater kind of analogy, where in fact, if Celsius and the BlockFi problems, et cetera, if all those transactions were on chain taking place in a DeFi world, I think the outcome likely would have been very, very different, right? It would have been a much more orderly flow of funds and transactions. And you can't negate the possibility that people do stupid things. I think we had some over-leveraged people who were enjoying when making money was easy, and they got over their skis, and the service providers were all too willing to support them and lend them more in unsecured collateral, et cetera. Let's leave the ignorant acts of some people to the side. But from a market structure standpoint, I actually think DeFi has held up quite well here, and that's one of the lessons I think we should take from this last 6 months, and particularly the last 3 months. And I think you're going to see some more strength behind the DeFi movement. I think it's going to evolve into a really interesting segment of the market. You're going to see more innovation there, et cetera. The other thesis I would suggest to you, and we're certainly having more and more conversations, part of it's relevant to Polynet, but part of it is just conversations we're having with larger institutions, has to do with what you touched on earlier, this tokenization and digitization theme. When we talk about digital assets, we do it deliberately to include the non-crypto type of assets that will benefit from tokenization and digitization. Public equities are probably at the far end of the spectrum because they operate pretty efficiently today, but some of the less efficient, less liquid, less transparent assets that would benefit from a tokenized or digitized form, all of the big banks have teams of people looking at this because they feel like this is an inevitable trend that will come to capital markets. underlying all that is the blockchain technology or distributed ledger technology that all the big banks and other market participants are thinking through how that will impact their current operations. And so very much alive still is this notion that blockchain yes, crypto maybe, or blockchain yes, crypto no. I think that crypto no is still in the minority, but maybe getting a little bit louder over the last 6 months. But there is I think, growing belief that what's happening in blockchain, capital markets, tokenization, digitization is not only here to stay, but in some cases, maybe being pulled forward. And so I would definitely watch this space. I think you're going to see a lot of really constructive and positive announcements coming out over the next 6 to 18 months around real developments that are happening there.
Yeah, and it seems like the maturation and natural evolution where you have the native assets and tokens to the blockchains, but it's the real world application. And that is, okay, you're putting real estate on the blockchain, which blockchain, and that could benefit the native token and so forth. And then tokenization of other things, whether it be rare cars or artwork, I don't know, NFTs, and going beyond artwork as well. And NFTs being used for whether it be the housing industry and deeds and so forth and whatever it may be. I think that's like the next evolution, right? But it's just which blockchains are going to be used.
That's right. That's right. So time will tell.
Yeah, and that's the big part of it, of trying to see who's going to get the adoption. I wanted to ask you about crypto regulations. Obviously, we had President Biden release the crypto executive order back in March of this year. And I think the reports are going to be coming in pretty soon. And obviously, you have these situations within the crypto market. We talked about Celsius and so forth. And then stable coins have been almost like a big target for the government, because I know they're coming with their CBDCs and all these things. Do you think we see crypto regulations this year, or is it too many politics, too many things going on with the economy, and maybe it's next year?
That's a tough one to call. I think the wheels are certainly moving forward. I think the executive order, while it didn't say anything specific, it said one very important thing, which is that there's a there, and you need to start leaning in and regulating this space. And the events of late, I think, only further propel regulators to have to pay attention to it. Whether or not we get any firm guidance is a tough one to tell. I think the proposed bill from Senator Gillibrand was a good start. It's kind of forcing a conversation. Right. There still has to be this understanding of which agency is going to regulate what asset. And so there's a little bit of a hot potato going on there. But I do think you're going to see some regulation, whether or not we get an ETF approved before the end of the year. You know, midterm elections always throw a little bit of a spanner in the works. And so if I had to guess, I don't think we're going to have any real legislation being inked and on the books by the end of this year. But I think December 31st, we can look back and we will have seen some incremental steps between now and then.
Yeah, I think the Lummis-Gillibrand bill was good. It's just moved us to a higher threshold, if you want to call it that, and kind of raising the bar. And I know sometimes these bills get put out, they get chopped up and put into different bills. So it's certainly a big element of progress, I would say, even if it doesn't get passed.
That's right. And I think Secretary Gensler coming out and talking repeatedly now about a number of different areas that he's focused on from a regulatory standpoint, specifically around the segregation of duties between exchanges and custodians. I think that's a message that we've heard several times from him and the SEC, and I think that's something that the industry needs to pay attention to as well.
Now, a lot of folks are not happy with the SEC because their stance on regulations and using enforcement versus putting out clear guidelines. Recently, the SEC denied a Bitcoin spot ETF from Grayscale. Grayscale is now taking legal action. Right. You know, what are your thoughts on this? This just seems to be getting very messy, and it seems like folks in the crypto industry are going to go on the offensive against the SEC. And looks like Chairman Gensler is just going to continue his hard stance. It just seems very messy.
Yeah, it's an aggressive move. I don't want to second guess, Grayscale or anyone how they want to approach it. There's always this balance. How do you want to address and what kind of rapport do you want with the regulator that ultimately is going to regulate you? How you don't want to necessarily roll over and just do whatever they say. You want to be proactive. You want to be, I think, articulate in your positions. They should be well founded. I think I think it's a challenging position to be in a regulator in this space. On one hand, your ultimate goal is to protect investors, protect consumers.
Right.
Digital asset ecosystem represents a whole new area of education and ultimately regulation. And the risk of getting it wrong is high. And so we can criticize the regulators for taking too much time. I think at their core, regulators want to do the right thing. They want to be educated. They want to make sure that they don't err in terms of what they ultimately end up bringing to the market. So I've got some patience with them. Would I like to see more regulation? Yes. Would I like to see it sooner? Yes. Would I like to see it more articulated, more refined? Yes and yes. But it takes time. And so what the right approach is, we choose to build a constructive partnership with our regulator, particularly with the New York Department of Financial Services, where we have our trust company license. And we find them very accommodating. We find them very interested in building a partnership, very interested in dialogue. We like to inform them what our thinking is in advance, and build a partnership of trust there. It's a challenging position to be in, though.
Oh yeah, and certainly the regulators have their hands full. There is a lot to go through here, and you got these global blockchains, right? And there's just so many different aspects to it. It's very different from the traditional financial world. But just even in the Ripple case, right, where regulation by enforcement, that seems like something the SEC shouldn't do, and maybe they take a less aggressive stance and a more like kind of what Commissioner Hester Peirce has been suggesting, a safe harbor. And it's like you engage with folks, but you're not hitting them over their head because they came in and shared details with you. You're trying to help them and help them get to a better place. Any thoughts on that?
Well, I think absolutely. I mean, there's no question we would rather seek legislation, excuse me, than enforcement around doing it, particularly when you think about having to manage a company without clearly defined rules. So it's like putting your car on the highway and the rule is don't speed, and you ask what the speed limit is. Say, we can't tell you that. That's for you to decide. But if we deem you speeding, then we're going to come and give you a ticket. It's really hard to build a business in a global industry when the rules of the road are not clear. And when you are saying, hey, give me the rules of the road, tell me the requirements, engage with us in a dialogue, and yet not being, in a position to feel like you're being met halfway, that's the hard part, with the best of intentions. And I think not only Ripple, but other companies certainly include us in this ring. We really want to have clear guidance in terms of what the regulators are thinking so that we can build accordingly.
For sure. Two more questions here for you. As far as NFTs, we'd love to get your thoughts. I think we may have talked about it in our last interview, but are you guys at PolySign Standard Custody looking to do anything on the NFT space, custody wise, or even I don't know, anything else beyond?
Yeah, we're absolutely excited about NFTs. We think that there's a real long-term trajectory of the adoption of NFTs and how they're going to be utilized beyond just the kind of phase one, more kind of creator economy art related NFTs that are in the marketplace. And I think you're going to see more and more. And we are thinking about what we can do within our trust company to support the growth of that industry, and what other services we may build outside of the trust company to have a platform for investors and developers to build upon some of the technology that we have to facilitate that.
And final question here. This is a wrap-up question. If you could create your own metaverse, what would the theme be?
I have to talk to my kids. I'm still I'm a Luddite when it comes to all things kind of second world. Something to do with being on the water. I'll just say that.
Oh, that's yeah. And for me, it's like space. I would love to, have something where I can explore different galaxies or whatever it may be. But
Well, you got some cool photos coming out of the new telescope. You
Yeah.
can get your head around that.
Right. Yeah. So we're still so early, and it's a mix of the VR and the augmented reality. So we'll see where it goes. But I'm always curious what everybody, if you could create your own, that what would that look like? Jack, pleasure chatting with you. Thank you so much for joining me today.
Thank you. Always enjoy our visits, Tony. Appreciate you having me on.